Welcome, everybody. Don Cornish from Dewpoint with Derek from M3. We're going to be talking to you about cyber insurance. Derek, I'd like to do your introduction, please.
Yeah, Derek Laczniak, Director of Cyber Liability for M3 Insurance. Been in this role for nearly a decade when I started the practice group. M3 Insurance is a top 50 insurance brokerage headquartered in Wisconsin, doing business all over the country. Our cyber liability practice actually specializes in more complex risk, financial institutions, healthcare entities, large municipalities, and certainly we've seen a lot of changes in the cyber liability marketplace from a decade ago to today. So looking forward to having this conversation. Thank you.
Thanks. And I'm Don Cornish. I'm the Chief Information Security Officer for Dewpoint here. So let's get into it. Derek, run through the evolution. Just give us an idea of what's happened since 1990.
It's been really done. It's been a really interesting change. And if you think back to the 90s, and I don't want to say that cyber liability insurance started in the last 10 years. It became mainstream in the last 10 years. It became the fastest growing product over the last 10 years, year over year, that the insurance marketplace has seen. But policies were being written primarily highly customized forms all the way back to the 1990s. And not to date myself or anybody else, but we all remember perhaps Y2K.
Yep.
And at that moment, Don, when Y2K was coming on, a lot of the largest kind of Fortune 1,000 companies that were heavily invested in tech, think, .com bubble, these organizations were looking for insurance policies to cover
just
the world.
case.
Yeah, the world melting down
from
Y2K. And so that was really when some of the very first policies were being written. And, not surprisingly, a lot of these were customized in Lloyd's. They were written for the likes of Microsoft, et cetera. And this is really the first time that we ever saw the transfer of risk for cyber related losses. And as we continue to move from the 90s into 2000s, and we started to see just that technology wasn't going away.
Yep.
The internet was going to be something that was going to be the lifeblood of how we did business. And as the more and more activities, more and more work came online, there was more of a sense of security and what am I sharing and how do I keep it safe?
Well, after all, the internet wasn't really designed with security in mind. It was connectivity. So this was a complete change in philosophy.
I just listened to a recent podcast about the founders of PayPal, and they said that security wasn't in their top 5 things when they developed the software. And as you said, that's supposed to be an encryptable, safe transfer of money. So really, as the world was moving really quick and connectivity was the primary goal and security was definitely secondary, you started to see that there was changes in some of the regulations on a state and national level. To this day, we do not have federal overreaching cybersecurity laws outside of protected health information, which is done by OCR. What we do have is a patchwork of 50 state laws. And up until about 5 years ago, there were still states that didn't have any laws on the books. But there is no doubt when I speak among my peers and with insurance companies that the changes in the regulatory environment on a state-by-state basis were a driver of what made insurance more and more practical, especially for larger organizations. Moving through the 2010s, starting in 2015, cyber liability insurance has been the fastest growing insurance product year over year from 2015 to today.
And is that because companies are becoming aware of it, or it's being enforced on them from a regulatory perspective?
Well, as companies are becoming more aware of it, you had this incredible moment around 2015, 2016, where the cyber liability marketplace had extreme profitability.
Right.
This is around the time of Target, around the time of Home Depot. So if you put your mind back to what was going on then, these cyber liability breaches, these cybersecurity breaches like Home Depot, like Target, they caught headlines. They created fear, but the reality is that the frequency of losses on Main Street was still pretty low. So when you have all this fear out in the marketplace, but the actual losses are pretty low, that's the perfect environment for insurance companies.
Yeah. High fear.
Yeah.
Low payouts. Yeah.
So to put it in perspective, from about 2015 to 2019, the cyber liability insurance marketplace quadrupled in size. Wow. And during that time, the loss ratio for these carriers was hovering around 30-40%. If you layer in 20% of overhead plus investment returns, that's an extremely profitable
return. Yeah.
line. So what happens when you have high demand, extremely profitable line of coverage? A couple of things happen in insurance. Coverage gets broader, meaning more and more is covered because that's in a carrier's way to compete for new business. And then there's a race to the bottom on price. Right. So coverage gets wider, price goes down, and demand is soaring. And that happened up until 2019. And 2019 saw the rise of ransomware.
Yep. And that turned everything on its head, didn't it?
Absolutely. It is systematically and probably to the point where it will not change the way that this is insured. And what I always like to share with people is that if you think back again to those first breaches, Home Depot, Target, some of those big names, there was a desire to steal data and then resell it on the black market, whether it's credit cards, personal information. But if you think about it, criminals are lazy. And it's a lot of work to fence, I like to use the word fence, 1 million, credit cards. And what happens when your credit card gets stolen? How many transactions am I going to be able to use with it?
Yeah, if people are watching, just one first time, and then it's
a lot of work for not a lot of payoff, which is why a credit card or MasterCard on the dark web goes for about $10. So insert ransomware, which is more of an instantaneous payout. It's in now we've seen a rise in crypto, making the payment of that ransomware
easier, harder to trace, but easier to do.
Easier to use. I can go on vacation and use crypto. And so criminals have migrated to ransomware. And to make it even worse, you don't have to be a revolutionary software engineer to be in the ransomware game. If you go onto the dark web today, you can license ransomware.
Sell it as a service now.
Sell it as a service.
Depends which bit you want to do. Do you want the distribution list, the encryption list, or whatever? But you buy it as a commodity.
100%. And ransomware turning into a SaaS product has been detrimental to the marketplace. So conversely, where I said 30 to 40% loss ratio, 20% overhead, a good healthy profit margin for carriers of around 30%. The last 3 years, most insurance carriers have had pure loss ratios in excess of 100%.
Wow. And that's all because of the change in the dynamics and the ransomware, the frequency that's we've seen in the industry.
And those changes have had material impacts on the insurance marketplace. And we'll get into that as we continue our discussion. But it has systematically changed pricing for the policy. It has systematically changed underwriting. And it has changed the amount of coverage and the breadth of coverage that's available.
Right. Okay, well, let's have a look at the anatomy of a breach. What would a company experience as at the dynamics that as a breach may come through?
The most important step of a data breach is really the first 24 hours to 48 hours. I've been through over 100 data breaches in my career, ranging from extremely volatile ransomware shutting down entire organizations to, dozens and dozens of inbox compromises. And the one thing that they all have in common that I've always noticed is that how you act in the first 24 to 48 hours absolutely determines what the outcome of the data breach is going to be. You can make something systemically worse in the first 48 hours, but you can also set yourself up to have a lot of success in terms of coming out of it in the first 48 hours. And that first phase is the discovery phase. So think with me here. This is that moment where your IT staff internally at whatever your organization is, or your outsourced provider says something's not right here. Maybe your endpoint protection picked up some unusual behavior. Maybe you simply went into a shared network drive only to find out nothing there, or it's all encrypted. And that's when the moment someone, like in a ransomware case, they open the JPEG and they read, think about the movie as one of those newspapers together, ransom notes. And that's the moment, that's the 0 hour. And that discovery, what you do from there is really where I've seen a lot of mistakes, but a lot of companies really come out of it. The most important thing is, and this is true whether you're purchasing an insurance policy or not, the most important thing that you need to think about is there are experts out there that can help me.
People that do this day in, day out.
Every day.
And they're a specialist in their area, whether it be legal, forensics, negotiation. They're all out there to help you if you choose.
100%. And where people mess up is in two places. One, they think that their own internal resources, the the people who discovered the incident are best positioned to handle it. And that's not to ever knock somebody that's in those roles, but if you have a network admin that's used to keeping your data center online,
they're not actually skilled to the level of these experts.
The forensics folks that are out there, all they do is track. All they do is pick up the breadcrumbs. So it is incredibly important in that discovery phase to know, I'm going to make 2 phone calls, or I'm going to make 1 phone call, really. And you need 2 things at the beginning of every data breach. And certainly a cyber insurance policy will provide these to you. But even if you don't have it, who is your law firm? And here's why you need a law firm. And we call it a breach coach in my world. And when we say a law firm, this individual is going to do a couple things. Protect privilege, which is really critical during the investigation, meaning if you face litigation 6 months from now, how is everything that we discovered during the investigation going to be attorney-client privilege? But they also are just skilled in understanding the cadence and the movement.
What to expect and
what to expect.
And is it better in that case if an organization has internal legal representation? Should they just rely on that, or should they be bringing in that external legal entity?
95% of the time, the attorney that you call to review corporate leases and handle typical business matters, 95% of the time, they don't have the expertise. Right. These are separate firms that have data and privacy units. Right. These are firms that are specialists. They've gotten into the business of data breaches. And sometimes it's hard for me to tell customers, hey, it's no offense to them. And if you ask them, hey, can you help me with my data breach? They're going to be inclined to say yes.
Yes.
They want to say yes.
They want to say no. Like, I've never done one of those.
For $450 an hour, they want to say yes. And just knowing who that first call is going to be is so critical. And from there, a good data breach coach is going to set you up with the appropriate forensic.
The coordination, the whole works. Yep.
It's incredible over my career, the amount of times that I've gotten a call as the cyber liability broker from a customer, and they tell me, 6 days ago, we had a cyber liability.
6 days. It's a little late. The horses bolted after that one.
It is gone. And really, it's not rocket science. You need 1 phone number and a backup person to that phone number in case you run into something like conflict. Yeah. And then they should, if they are the right kinds of qualified breach coach, they will kind of point you in the right direction. So as we look at this slide here, you go from discovery to response.
Yep.
And really, if you're doing it right, that's a 24-hour
window is really what you want to be doing.
Something's going on. I'm calling an attorney. I asked my attorney to get the forensics people. We should have a scoping call set up where everybody bears, the truth of what's going on, and within 8 hours, they should do it right.
On that, a lot of companies that I talk to, or people in it, they're really reticent because they go, well, if I pick up the phone, I'm going to have to be billed for it or whatever. And so they're trying to contain the cost, which is, from what you're saying, is probably not the right. The cost that they're trying to contain is going to be minuscule compared to the fallout from such an event.
Absolutely. I think trying to band-aid the problem ends up in the long run having higher detrimental and higher costs.
Yeah.
And especially because of the way the regulations are set up today, and this is especially true if you are dealing with health information.
Yep.
It's one thing to brush something under the rug, and if nobody ever finds out, you'll probably be okay. But if you get what we have seen from state legislators, and this is attorney generals that govern over state data breach laws, that if they find out about a data security incident that you were not upfront and deployed and kind of got out in front of it and transparent, that's where they have levied kind of the legal hammer.
Yeah.
And so those kinds of impacts, if you try to ignore it,
could come around and bite you at a later stage.
Not to mention, especially in a world where we live in with ransomware, what's also there. I mean, fixing the problem here doesn't mean that the criminal hasn't put in a payload.
Backdoors, that sleepers sitting there 6 months later, you're going to find, got hit again. And I think the statistics are a vast number of firms that have been hit once get hit again with it. And I know in the small, medium business, a lot of small businesses go out of business within 6 to 12 months of their having an incident. So, it certainly makes sense for them to get it under control as quickly as they can.
And the one way to keep costs out of the equation of doing what is probably the most appropriate, and we'll talk about this is obviously what I do for a living, is by using risk transfer or insurance policy. And insurance policies that we'll talk about are set up to not just handle those long-term impacts or those short-term impacts, but they are truly more than anything an expense reimbursement policy.
Okay.
So as we continue talking today, we'll see that 95% of data security breaches are going to utilize legal forensics, maybe some kind of notification. Policies are really set up to cover those frequency-based expenses, and to the extent that you can afford some insurance to handle those frictional costs. Maybe you're more self-insured on those long-term. Maybe you have some out-of-pocket because you diluted your limit on the back end, but there's really a lot of readily available resources and affordable policies on that front end for some of those frictional costs.
Sure. Good. Thanks for that. That was a great overview for it. Shall we move on now and look at, okay, if I take out some cyber insurance, what am I going to actually get for the money? What actually can a company expect on their cyber liability program?
Yeah, so we use this diagram, and what's really interesting, and I think really great for the consumer, the buyer in today's market, is that I've been using this diagram by and large without change for the last 7 or 8 years. And what that means is I've told you that the market has changed. There's been a lack of profitability, but coverage is still
held. Much the same.
Yeah. Okay. And normally when you've seen such challenging environments for cyber carriers, you would see them not only taking price, not only increasing underwriting scrutiny, but they would also be kind of restricting coverage. And they have in some ways, but for the by and large, the main component. So think about this chart here, and I'm going to start on the third-party liability. When I say a liability and I say cyber liability coverage doesn't really change too much, whether it's general liability, auto liability, umbrella liability. All liability policies are designed to pay for a couple things: defense and settlement in the event that you have a third-party action against you. So in a cyber liability environment, if you think to the main causes of this, we talked a little bit about it already. Regulatory fines and penalties, whether they're PHI losses from HIPAA or PCI or whatever, any of those components. If a regulator were to launch an attack, it could feel like that, but a lawsuit and an investigation, and then subsequently fine or penalize you, your cyber liability policy pays all your defense and all of your settlement.
Oh, okay. All right.
Likewise, what we have seen, and this has increased, unfortunately, in a world where we see litigation financing starting to take place more and more. Litigation financing is essentially private equity-like organizations that are investing in lawsuits and funding them for attorneys and then participating in the settlements.
Revenue making.
Revenue making. And only in, perhaps maybe this country does that become a really profitable business. But when you have lawsuits that happen on the civil side, it's normally a plaintiff attorney getting wind that so-and-so large organization had $1 million
records compromised.
Okay. And there's science out there today that says, if I go after this with a class of this size,
I'll make X amount of revenue.
I'll make X amount, which I think is somewhat sad personally, because being on the tail end of millennial status, I think the assumption of privacy in this world has gotten much smaller.
Yep.
I don't think anybody necessarily cares if you have my driver's license number.
No. There's certain things I do care about.
Certainly.
Yeah.
And so we have seen that civil actions have actually gone up while regulatory actions have gone down. But again, the third-party liability is designed to cover your defense for action like that and the settlement. And a lot of times when you have a civil, you're going to have a regulatory action, and you need 2 different attorneys to represent you in those matters, typically. And so that's kind of the obvious ones. Now, I call those the low-frequency, high-catastrophe events. So if we see regulatory or civil actions in 5% of the data breaches that we run into, that would be pretty high. However, when you do face these, they're extremely expensive. And it's because of the defense costs.
Yep.
The settlements on civil actions are typically not that big on a per user basis, maybe $100 or $50 a person, but it's the defense cost that'll
really hit the button.
Well, the litigation attorneys in the privacy space are, depending on jurisdiction, $300 to $800 an hour.
Oh, wow. Yeah.
And if you have a long drawn out litigation process, it could be extremely expensive. But on the right-hand side of the screen, the first party cover, this is really, to me, why you buy cyber liability insurance. there are a ton of expenses that go into dealing with a cyber breach. I've already mentioned a couple of them. Your legal costs for your breach coach, not your defense counsel, but your
breach coach when it's actually happening.
When it's happening. That's the quarterback.
Yep.
That's the quarterback. And then the forensics costs.
Yep.
So again, the reason that you're not using just anybody is because I call them digital ninjas. These are the folks that come in and they have been trained. A lot of them are former government, NSA, FBI guys, and they figure out how it happened, when it happened, is it still happening? They're going to be the ones to negotiate on a ransomware payment, for example. Right. They're going to spend all their time figuring out how it happened and then working with you to clean it up. And again, the attorney on the breach code side and the forensics team, they're all going to be in that $350 to $600 an hour.
Yeah, so they're not cheap guys. And the forensic, no doubt, depending if they've been in there a long time, it could be a very extensive and drawn-out process to do the analysis.
Well, and you know this at Dewpoint, you work with companies of all different sizes. Your forensics analysis is going to vary depending on the size and the
complexity of
your infrastructure.
Yep.
And so I've seen statement of works for ransomware cases that are $25,000, and I've seen them where there's $300,000.
Yep.
And so that can really vary. And then subsequently, let's say you find out that you have a ransomware event, for example. The policy is going to pay for the ransom, meaning the actual digital crypto that you might send. By the way, I've had so many customers of mine tell me I would never, out of moral principle, pay a ransom. And then I've had at least a handful, like down the line, pay the ransom.
Yep.
Over 70% of people pay the ransom. That's because the ransom software these days, it works. It's designed to be effective. So the cost of the ransom is covered. Again, what we've seen in ransomware today is not just encryption, but exfiltration.
Yeah, that's the malicious actors have worked out. Well, it started off as, yes, I'm going to encrypt it, and you buy the keys back. And now they've gone down the path of basically saying, okay, I'm going to make sure that you're going to pay me because I'm going to take a copy before I actually encrypt it. And if you don't, then you're going to be shamed because it's going to go out on the dark web or the public internet, depending on what their motives are.
We saw a number of companies as the ransomware was rising, almost kind of go back, to the Stone Age, and they started using, not tapes anymore, but offline data.
Yep, the in-gap it so that they can guarantee that, well, they're not going to get that copy. They might get the other one, but they're not going to get the one that's offline, that's air-gapped. Yep.
And so we saw that a lot. And so the bad actors were kind of like, well, this sucks. Now they have another backup. They're kind of telling us to pound sand, and now we're not getting paid. Well, in turn, they said, well, I've already encrypted it. What if I steal it?
Yep.
So now a lot of the ransomware, I think over 85% of ransomware today, for example, includes exfiltration of the data. Now, my most recent ransomware case, which is about a couple months ago, these were some of the best bad actors I've ever dealt with. After we paid the ransom, it was about $270,000 ransom, more of a smaller, medium-sized business. The bad actors sent us a video of them deleting all the information they stole, literally dragging it into the recycling bin.
In the recycling bin and going, hey, you can trust us, because that's the other thing that most people are very skeptical about is, well, how do I know that they said they were going to destroy it? How do I know they've really done that?
And in my experience, I've never had a bad actor, redeploy ransomware after paying. I've never not gotten a decryption key, but and I honestly, I believe that they probably did delete it because I don't think that anybody wants to go through the work of doing something with it. However, legally, your attorney will tell you, you don't know if they have 9 copies of it.
Exactly.
You don't know where else they have it.
Yeah, they run it like a business. All businesses have backups and business continuity.
Save it for a rainy day.
Exactly. Yeah.
So you still end up with a lot of times these notification costs. And so again, to continue on to that first party insurance cover, you're picking up all of your notification costs, all of your credit monitoring costs. I think credit monitoring is really interesting. The acceptance rate in 2021 for credit monitoring was under 4%.
Really?
Which tells you that the assumption of privacy that people, they don't care because it's not that hard to enroll in it, but under 4%. And for many years, the Experience and the Equifax of the world, they charge you on how many codes you bought, not how many were redeemed. So it did lead to a lot of increased costs. That has since changed a little bit. Now they charge you on what's redeemed. They just charge you 10 times more than what it was before. So they're always going to find a way. But again, all of these costs are covered. All of these components of just cleaning up and examining and investigating are all picked up under the policy. And you obviously can probably tell that conversely, third-party liability that defends the settlement, low frequency, high catastrophe. Likewise, on the first-party cover, that is lower catastrophe, high frequency. There's very, very few times that you're not going to tap into this bucket of coverage when you're dealing with a cybersecurity incident. And how you buy cyber coverage in today's market, it's in increments of $1 million, and that $1 million is going to be shared throughout both sides of this diagram. And so, obviously, as you go up, you just have more of a bucket to pull from.
Yeah, no, that makes sense. And I guess the other thing that I know from talking with a lot of the small, medium businesses we deal with around the negotiation for the ransom, etc., you ask people, well, 99% of the time, the ransom is required to be paid in Bitcoin. And you ask people, well, do you know how to buy Bitcoin? And invariably the answer is no. And in their organization, well, who's going to buy Bitcoin for it? Don't know. So these are other services that are all built into this so that as a business, you don't have to start worrying about those.
There's, and that's a great point, Don, because there is certainly not every business wants to be paying ransoms because of some of the federal regulations around money laundering and supporting, quote unquote terrorist activities. There's actually a smaller subsection of people who want to actually transact a ransom payment. Luckily, again, as this marketplace has matured, that is also included in your policy. So there's a number of firms out there that have started that charge flat fees. They loan you pay them US dollars via an ACH or a wire transfer. They pay the criminals, and then you get reimbursed by your insurance company. So there's an economy that is developed around, unfortunately, based on need on how to deal with cybersecurity issues like this.
Certainly a complex and more complicated environment, I think, than most people taken for granted. So, alrighty, well, that's a great overview for it. I do appreciate your time and your insight there, Derek. Thank you very much.
Yeah, thank you for having me.